I for one would not like to say that PSU by and large are extremely overvalued, so we should not go near them or we should sell whatever we have. We were bullish, let's say, on a real estate stock between 2009 and 2014, and it was a disaster, right? It was a disaster to be bullish on real estate when interest rates are rising, where inflation is rising, real estate prices are declining. If you identify an exceptional entrepreneur, but if there is a headwind in a particular sector and it is not part of a larger theme, it is very tough to make money.
So tell us, what is interesting you at the moment? Where do you have your eye?
I have one powerful theme which I believe will play out over the next 2 decades. This is basically carbon neutrality and sustainability. What are the top industrial houses? Whether you talk of Adani, whether you talk of Reliance, whether you talk of Jindal, what are they doing? A lot of their effort is on the green energy. A lot of their effort is on that sector. Worldwide also, what is Elon Musk trying to do? So the money is going to shift, and I think it's a very, very large theme.
The stock market, a great place where we can really get our fortunes in order, especially when there's a correction. We investors have learned over the years that when the market cracks, when it gives you that 500 point, 1000 point dip, then you need to go all in, put your money and invest for the long term. The problem is when that correction simply doesn't come. Then how do you invest? And it is exactly this question that I am seeking to answer through the help of a guest on this week's edition of the Market Café. Hello and welcome to the show. I'm your host, Surabhi Upadhyay. The guest who I will get you on the show today has been in the stock market for the last 30 years in many, many different capacities. He has been with some of the biggest asset management companies of the country. He was heading what was then called Reliance Mutual Fund. Today, he just follows his own passion, his own calling. He invests purely for himself. And I'm very sure that he will have the answer to this one question as to how do you invest in a market that's constantly rising. The guest on the show today is Madhu Kela. Let me go and introduce you to him. Madhu sir, it's such a pleasure to finally have you in the Market Cafe. We have been looking to have this conversation since Diwali. So chalo, 2024 I think is a lucky year then.
Thank you so much Surabhi for having me, and I'm really looking forward for this interaction.
So am I. So am I. And you know, so Madhu is someone who has seen, I think, this market over at least 30 years, if not longer, 30 years. So he's seen the ups, he's seen the down. And that's why, Madhu, we needed some guidance from you to understand how to invest in a market that only keeps rising. And you know why I ask you this, because investors write into us and they interact with us. And now after COVID, I think most people have understood that if 1000 point ka fall aata hai, when suddenly there's a war breaking out, you put money. If you're a long-term investor, you'll make money. So that's become easy. What is difficult is to put money in a rising market. So therefore, we need your help.
Honestly, it is even more difficult for me than a normal person, because these are times of the markets when your experience and knowledge works against you.
What are you saying?
I'm being serious.
Really?
Like, because the more knowledgeable you are, the more you are on top of the company, the more you are on top of fundamentals, the more you are scared of this kind of, little bit of euphoric patterns which happens in the market. The more you think about it, the more you analyze, the more you get puzzled. That अभी तो ये इतना था और अभी इतना हो गया।
हो सकता है इसका
मैं
EPS
honestly
इतना
आपको बोल
है।
रहा हूँ, मेरे जैसे लोगों का अभी हाथ ही नहीं चल रहा है।
Really?
Because, yeah, it's an honest confession
My God.
that the way the markets have risen, something which you saw, let's say 1 year back at 100 rupees, suddenly you see the same stock is 300 or 400 rupees, So it is that phase of market wherein it is difficult, and I would say it is more difficult for a experienced person, because what you have gone through in last 3-4 cycles, that whenever you have aggressively participated in these kind of market, the experience has not been very good. Maybe this is a very different time.
That's the thing, no? They say this time it's different.
No, but
then they say it never really is.
But Surabhi, actually this is different times. Let me just, let's just revisit that. I used to why am I not selling my portfolio? This time around it is very different. Let's say, look at the whole setup of the market. So in my opinion, there are 3-4 things which have really changed, right? One is the political stability and the stability of policies, right?
Sure.
But we have had this government for last 10 years. It's been very progressive. It's been very, very good for markets. It's been reform oriented. A lot of the things which did not get addressed for decades have got addressed in the last 10 years. And the base case assumption of the market is that there will be continuity.
Absolutely.
Like beyond 2024 also.
Yeah.
So that is why one reason this is different.
So the market is working with absolute thought of political stability and continuity.
And policy continuity.
Policy continuity, yeah.
Second thing which I would say is that for the first time, India's macros are very stable. If you look at our inflation, if you look at our interest rate, if you look at our currency, over the last, even
current account deficit.
Even in the volatile situation in the world, India has done an absolutely phenomenal job, right? When the US interest rate rose so much, when European interest rate rose so much, we did not see that kind of cycle, right? So we have done very, very well in managing macro, and that is again leading to a more stable and higher valuation, I would say, for the market. Third thing is equity actually becoming a asset class.
Oh yes.
Right.
Now,
Because I've been here for 30 years, people abhi share bazaar kya hai, liya, bet diya, but gold was a real asset class.
Property
or real estate was a real asset class. Fixed in, but this time we are seeing equity as a real asset class, where more than like $2 billion, $2.5 billion every month is coming through SIP. So people have got now, they are pre-COVID, you had only maybe 4 crore demat accounts, which is now touching maybe 14 crores. So a lot of domestic people have come into the markets, and it is kind of become a very stable asset class, right? And a regular one, right? I don't think, unless there is a real catastrophe or something really goes wrong, this thing is going to change in a hurry. That has been the experience of markets, even developed markets. So that is why I would say this time around, it is surely different, and the markets are showing that. Right?
So you're saying a lot of very important core fundamental factors are coming together in a positive way.
Yeah, in a way that is what is showing in the market.
Before we talk about the strategy in this market, I want to take you back in time, please. Sure. You're someone who's seen the previous mega bull run that we had, right? And I'm talking about the 2004 onwards all the way up to global financial crisis, 2008 bull run. And I think that is the first time this market got real brush with big, foreign money, the starting of domestic retail participation. I know a lot of us, like I opened my first mutual funds back then as well. So what are the parallels? You're the best person to ask this between that bull cycle and this bull cycle. And what are the differences, if any?
So, there are a lot of differences, I would say. So, as I say, first, at that point of time, there was no visible political stability, and there is no visible policy stability, right? So, that is one of the fundamental differences. Second, I would say, our corporates today are in a far better situation than they have ever been, in my opinion. Most corporate balance sheets are fully
deleveraged, they're clean, healthier now.
Banks are completely clean and are willing, are and ready to support an accelerated growth going forward. Third point is that competition actually has receded big time. So if you look at in any sector, like in telecom, we had 15 people 15 years back, and we are down to maybe 2.5, 3. So I'm just saying. Similarly, if you look at even any sector, like there's one sector which I follow very closely, which is this infrastructure companies, right, which are building the country. If you look at how many players were there in the last bull run versus how many players are there today. So I think competition has receded and the business has gone into hands of more organized player.
Yeah.
So that is again a clear difference. Third thing, Surabhi, which is very different for this market is the India's position in the world map. So geopolitically, actually we are in a very, very sweet spot post-COVID. So pre-COVID it was all manufacturing, everything was China, right? But the way geopolitically the world in a way has got divided, and India is in a neutral, in a sweet position, that when on one hand America says that we are their best friend, and on the other hand Russia also said that we are their best friends, right? So things economically, given the world order, is also working for it.
It's favorable for India.
Exactly.
So then what should we prepare for? A melt up, as they say. The market just keeps rising. What should we prepare for?
It's not that, Surabhi. I think this is the way you have to have patience in a way. The markets will find its own reason why it will correct. I don't know why it will correct. Maybe there's something geopolitical happens, something happens in the world. We don't know what will happen. The question is that is your own. If you are someone who has not invested adequately in equity, and if you're wanting to invest, correction is your only hope now.
That's true. Till we wait for this big elusive correction, how does one start deploying more capital in the market? Now, I want to start with the concept of valuation, right? When we talk about historical averages, India's overall market historical P, let's say, has been around between 19 to 22 times, and if it overshoots 22, we say the market's getting expensive. And likewise, individual stocks will have their individual ranges. Do we keep following the old set ranges? Should we be ready to break out of the ranges? How should an investor
We are already
understand?
breaking out, but if we just live, as I said, sometimes experience can be very expensive, right? I'm saying we are already breaking out. But the way to look at it, Surabhi, that it is the market which is giving you a chance. So if you are able to identify things, so let us say financial stocks by and large have not done well.
Absolutely.
But within that, PSU basket has done exceedingly well. If you look at last 3 years, so even though many of the large private banks have not done so well, but there has been opportunity to make money maybe in select NBFC space and maybe in select PSU. So if you look at the markets are actually running in rotation, so there is no real dearth of opportunity even in this market. So let's say if you are very lucky, if you got the railway theme right, or if you got the defense theme right, right? So then, and obviously there are a lot of people in the market who have gone right.
Have you been investing?
I have been very fortunate that at least on PSU by and large, more invested in PSU banks, but PSU by and large, we have understood, we have played it. So I think you have to now be able to identify these themes within the larger market, and once you are able to identify, then there is a lot of investable opportunity which are still there.
Now on PSUs, given the way the stocks have sort of risen and gone through the roof, 200%, 300%, how should one look at valuation over here?
Let me just give you some numbers. PSU as a whole basket, the market cap maybe 3.5 years back was 13 lakh crores. And it has gone to more than 50 lakh crores.
Wow.
In last 3.5 years.
The entire set of universe of PSU stocks.
So entire PSUs have been a 4x, right? But Surabhi, these are the lessons which we learn. Now I have so many of my investors friends who say, "Nahi, PSU lene ka hi nahi." Right? Because
of this
governance. Not because
historically.
That you would have missed one of the biggest opportunity of wealth creation.
Because that's how it was.
That's how it was.
PSUs are not well run and they're not efficient in capital deployment. We've heard, so many of these very valid arguments in the past.
That's exactly what I'm trying to say. That, so obviously some of the companies are looking overvalued. There's no denying to that. But I'm saying, let me just be a devil's advocate here and say that the new government comes and they say that we want to divest 5-10 companies. And actually there is a real divestment. Then what happens?
But will that signal a top? Will people get worried that now government is selling more float in the market?
If they sell companies, then it will not signal the top. If they sell real companies. So I, for one, would not like to say that PSU by and large are extremely overvalued, so we should not go near them or we should sell whatever we have. I would say whenever you get a PSU company, whenever you are comfortable with valuation, you have to step in. And the second thing, no one knows what the intrinsic value
exactly.
of this,
what is the comfortable valuation or the
what
right
is the intrinsic
valuation?
value? What we are saying is only the P&L.
Right.
Now, we don't know,
Right.
like in State Bank of India, do you know how much property would they have?
Separate land bank,
Will be a huge number. What will be the land bank for LIC?
Yeah.
We don't know some of these numbers. And once the governance is coming and once the government is after unlocking value, so making a basket case that it has gone up too much and we should sell lock, stock, barrel and we should not look at them may not be a right approach.
Specifically, since we're discussing PSUs, a word maybe on railways, a word on defense. Are there any PSU pockets which you think maybe there's a bubble or maybe there's just over exuberance which makes you a little uncomfortable?
So there are exuberances. I don't want to, grapes are sour, so I don't own some of these stocks. So it's easy for me to say that there is a bubble out there, but I am sure market has its own way.
Yeah.
And we don't know what do we call a bubble, Surabhi. We have seen what happened in technology names.
Absolutely.
Right, the world thought that they are in bubble since in year 2000 and it lasted in year 2002.
Yeah.
Right. So I would say, but you have to be very choosy and selective. That's the only thing which I would say.
Absolutely, absolutely. Okay, so tell us what is interesting you at the moment. Where do you have your eye? What are the next big themes for, as you said, the next 3 years?
So one thing which I learned, Surabhi, a very hard way, that, the larger themes are very few. And once you identify, then you have to stick to them. So let me just give you a perspective. If you and I discovered that internet is going to change the world, the way it has changed, and you understood it in year 2000 or 2001, right? There is more than $25 trillion of wealth which is being got created. Whether you talk of a Google, whether you talk of Amazon, whether you talk of Apple, these are all birth of
internet.
the
internet
right?
stocks, internet companies.
So I have one powerful theme which I believe will play out over the next 2 decades. And I am studying and devoting a lot of my time. This is basically carbon neutrality and sustainability.
Right.
When we go around, we can already see it is actually becoming a big problem. You look at the temperatures across the world, you look at the rain patterns, you look at the cold weather which is coming everywhere. We are already seeing, all the governments are already acknowledging. If you look at the amount of discussion which was there even in G20 forum on this carbon sustainability
and the green transition.
Exactly. So it is very clearly there. Second, if I look at, what are the top industrial houses, whether you talk of Adani, whether you talk of Reliance, whether you talk of Jindal, what are they doing? A lot of their effort is on the green energy. A lot of their effort is on that sector. Worldwide also, what is Elon Musk trying to do? What are the other top noted business people trying to do? So the money is going to shift, and I think it's a very, very large theme. Now you could pick up. It's not only, and this theme is not only restricted to solar or a wind power. There will be many interesting mega themes within this larger sector.
So have you sort of
like right electric vehicle? We were talking when I first spoke about electric vehicle 3 years back, 4 years back.
It was still very new.
It was very new. But you have seen what is happening to even a few stocks which are listed in electric vehicle space.
No, absolutely. So should one be looking at playing this through large conglomerates? Because as you said, all the nifty companies, then ESG is a very big phenomena now. So most of them will do whatever it's possible to sort of have the green element in their operations. So that's one way. But other than that, anything else that
there will be a lot of interesting companies, trust me, which will get listed. There will be a lot of small companies, mid-sized companies and large companies also, which will come in this overall theme. You have to just keep your eyes and ears open.
So green, keep the green theme in
I am saying carbon neutrality as a theme. I would not say only green. There will be many minor themes. And there will be one thing which I realized, if I had to go back 30 years, one thing which I would have changed about my investing would have been, even if I identified a really good bottom-up idea, I would like to see whether it fits into a larger, bigger themes or no. When I look back my career, maybe we identified a lot of very good companies, but we were bullish, let's say on a real estate stock between 2009 and 2014, and it was a disaster. Right? It was a disaster to be bullish on real estate when interest rates are rising, where inflation is rising, real estate prices are declining. However good the company is, you will not make.
You want to tell us which one that was?
Anyway, I would not like to get into individual names, but I'm just saying it did not play. So if you identify a theme right, and then even if you pick up a mediocre company, along with the tailwind, you will make a lot of money. If you identify an exceptional entrepreneur, but if there is a headwind in a particular sector and it is not part of a larger theme, it is very tough to make money.
Okay, so basically make sure you get the theme right.
Make sure even if you have a bottom-up stock idea, make sure that you are able to marry to a larger theme.
It's the surroundings and the bigger theme.
Exactly.
The story should be a big one. And then you pick
I don't like to talk about individual stocks, but you know that we invested in a transformer company.
Transformers and rectifiers.
But it is a larger part of the theme. It is part of this theme that new lines for this alternate energy, wind power, solar power will be built. And you will require a lot of transmission capacity, you will require a lot of transformer capacity, and it will be required across the world. It's not going to be restricted to India.
So this is one idea which is in sync with your thoughts on
it
carbon
is in
neutrality.
sync up. So no one can relate how a transformer company can be part of a larger theme.
Carbon neutral
carbon neutrality
theme. But okay, that's very interesting and helps us sort of get into the thought process. So that's one big mega theme for the next many years. Anything else that currently occupies your mind?
The other thing, we are looking at maybe not many listed companies, but they will come. Maybe in the area wherein artificial intelligence and cyber security. Again, this will be a big thing. It will impact many businesses, both positively as well as negatively. And there will be many companies which will come from India. There will be many companies which get listed. And I think these are very early days. Maybe if I go back to internet, maybe we are in 2002 or 3 of some of these larger themes.
The big mega themes.
Big mega themes, and they are likely to play. So we are looking at some. We have invested in some companies in unlisted space, and I'm sure listed space will be interesting to watch.
So as we are winding up the conversation, I also want to ask you about certain tips to keep in mind, because what happens is as these mega themes start playing out, there's a gold rush. Everything and anything goes up, and anything with the word AI will start rising. That's how human psyche is. So any advice on how people can avoid getting burned?
The advice is that once you are really caught something really good, whether it is individual companies or a larger theme, just because the stock prices have gone up, don't sell it.
Oh, okay. Keep riding.
You have to keep riding. You have to be prepared that even Titan experienced maybe 50% correction in last 20 years from their peak. But the man who could held it, that's why he was called my guru and Rakesh Jhunjhunwala, and that's why he was so distinctively ahead of everyone. And he was very clear that in a 20-year time frame there will be corrections. So I think the important thing is A, to identify it right, B, to then hold it really tight. If you have really got something which you believe is a really good one, then don't trade it. But otherwise, आपको लगता है that I will be able to buy this, then I will be able to sell this, then I will be able to buy. In real life, it doesn't happen.
And any tip on the first part of that advice, the identifying the right, how to avoid traps, how to avoid big mistakes when there's a huge mega theme at play?
Surabhi, that is where your experience, your hard work, your sincere effort towards any subject will count. Money doesn't come easy. So, and these are not things like you identify and then you say, okay, this will work for 20 years. You have to keep doing work. You have to keep reinforcing your belief that, okay, this is a large theme which we have gone into. And mark my word, some of these things will become very big when you are talking about India becoming, let's say, a 20 or 25 or $30 trillion GDP. We are at $4 trillion. If it happens over the next 25 years also, some of these themes will become seriously large in due course of time. And I'm so glad that we were able to speak not what the market will do in 3 months or 1 year. We are able to speak what the market has the potential to do. So I will summarize my thoughts.
Absolutely, please.
As of today, clearly, we are not in a very comfort zone to buy a small cap and mid cap ideas. But that doesn't mean that just because prices have gone up, you just sell everything and you just sit on cash hoping for a correction. So I think whatever good companies which you have, you should continue to hold in your portfolio, keeping in mind that there could be a correction. And incremental money, whatever you want to deploy, identify right themes, be ready. Markets keep giving you these chances. Every year, barring not 1 year in my career, it has gone, where you have not got a correction for any external reason.
So you will get that opportunity.
You will get that opportunity.
Be patient and be ready for it.
Be patient and be ready. At that time, फिर research करने को नहीं जाने.
Do your homework first. Be ready for the test.
Exactly.
Lovely, lovely. Great thoughts, Madhu. Fantastic speaking with you as always. Thank you so much for taking out the time and giving us this classroom. Very, very well appreciated. Thank you and all the very best.
Thank you so
for
much.
all the investments and for life in general.
Thank you so much. Thank you so much. Thank you for having me.
Okay, well, that's a wrap on this edition of Market Cafe. Hope you enjoyed the conversation. I will see you with another one very, very soon. Thank you for watching. Thank you for watching CNBC TV 18 and do follow us on all our social media platforms for news, updates and more.